Hi, I'm Mehdi and welcome to Your Finance TV's Crypto Revolution, covering all things crypto and digital assets. And there's always lots to talk about in the world of crypto. Adam, it's been a couple of weeks. We've had a little hiatus here. How you doing, buddy?
I'm doing good, Mehdi. There's been, obviously always a lot going on in crypto. I miss talking to you about it. So excited to be back together.
Fantastic, me as well. So before we dive in, don't forget to like and subscribe. The button's down there somewhere. I believe we're comfortably through 3,000, nearing on 3,500 subscribers. So I want to thank everyone who's been watching and subscribing. And stay tuned. And obviously, feel free to send us a note if there's anything you want us to discuss, because we're never shy to talk about anything in the crypto asset world. So, Adam, there's been, I guess while I've been away, you've been away. I'd say the biggest focus still has been everyone chit chatting about Bitcoin ETF applications from the big boys and girls on the street. But there's now secondary rates kicking off, Ether futures ETF applications. So who's leading the charge on this one?
Well, it's interesting, Mehdi. I think when the BlackRock Bitcoin ETF went in, and you and I talked about the fact that now this is, if BlackRock goes in, they know something, right? If BlackRock goes in, it's going to be really hard for the SEC to tell them no. They control too many people in Washington. They just are able to, put too much money out there. And we said an ETH ETF can't be far behind, right? So here we are. ETH ETF is not too far behind, and we've had the likes of I'm blanking. You can probably tell me who some of those ETH applications are.
Oh, well, Grayscale, Volatility Shares,
Grayscale, obviously, yeah,
Bitwise, Vanek, Roundhill, ProShares, I think are the big six.
exactly. I appreciate that, Manny. So it's notably not BlackRock, so not that big name that we heard with the Bitcoin one. They're probably focused on getting their Bitcoin ETF approved, but a lot of the ones, Bitwise and such, that had previously submitted for the Bitcoin spot ETF are now just saying, all right, we're just going to go ahead and put our name in for the ETH ETF, copy and paste what we did for the Bitcoin one and put it in for ETH, because again, once one is approved, how hard can it be to get the other one approved if the Bitcoin spot ETF is approved? So of course, all these companies want to hurry because this is going to be a monster race. There is going to be so much money poured into first the Bitcoin spot ETF and then the ETH spot ETF that all these companies are going to want to be a part of it.
Well, it sounds like the SEC only has about three people working on crypto anyway, so they're pretty stretched out right now, and they seem to be kind of not. I don't want to say wasting their time, but they seem to have their heads buried in trying to go after the likes of Coinbase still. And last several weeks we've seen the rhetoric surrounding the SEC versus Coinbase, or vice versa. And we've been seeing more details emerge over the last few weeks as well. So one of the points that did come out was the SEC asking Coinbase to halt all trading in everything except Bitcoin. Is there any base to these requests or demands from the SEC at all?
Well, Mehdi, from what I understand, they had actually, the SEC asked Coinbase to do that a few months ago before the suit came out. And Coinbase is now letting everybody know, hey, the SEC had asked us to get rid of all of our trading, all of our crypto trading other than Bitcoin. And we told them no. And maybe that would have stopped this suit. But, Coinbase saying, no, it's important. And by the way, now we can come out and say, remember that decision in the Ripple case? That was a pretty big one. That judge, Judge Torres said that in this particular case, XRP might not be a security, and therefore we feel fully comfortable keeping all of these tokens available for now. So this was really Coinbase saying, hey, a few months ago, the SEC basically came to us and said, you need to stop listing all your tokens, but didn't really give a good reason. They didn't really say, here's why these are securities. They just said, we think they are.
Well, and one of the things that I've always liked and we've discussed over the course of our conversations is that Coinbase has been very proactive in trying to keep their house in order. And they're doing the same here right now. I see that they're moving away from the more questionable revenue streams and sunsetting things like Bitcoin-backed loan programs for retail customers. So I feel like, again, Coinbase is really trying to do the right thing and remove any question marks around any of their revenue streams.
I think you're right, Mehdi. I think it's a good idea probably to get rid of this program, because when you let retail investors go take their crypto and borrow against it, of course they're going to do it without always understanding the risks. And there's always so much that Coinbase can do to try to get people to understand the risks until it's too late. And we saw what happened with, the likes of exchanges, people who should have known better, the likes of, Voyager and Celsius, and then even funds and groups like Genesis that should have known better about using crypto as leverage. They weren't even able to do so. So why would retail investors? And Coinbase probably knows, as long as they keep that program going, that's going to be one that the SEC can come after. So we might as well get rid of that program and make ourselves, as you said, play nice as much as they can, as impervious as they can possibly be, and not have little holes that the SEC can poke in their business.
So, Adam, since we last spoke, it's probably been about 2.5, 3 weeks. I believe Bitcoin was around 30,000, 31,000 when we last spoke. It's now at 29,000 and change. There's been no crazy market moves in Bitcoin, but there's still an awful lot of uncertainty and question marks in the crypto asset market, as we know and we're discussing right now. One of the things that I've been hearing and discussing with people is the fact that investors are still very, very trigger shy at times to pull the trigger on actually investing in some of these smaller startups as well. Sequoia seems to now be slashing their crypto fund as it's downsizing their startup investments. On an aside, away from the investment side, we're also seeing that Nasdaq has paused crypto custody plans, saying that this whole regulatory climate is causing a gray area that they don't necessarily want to dip their toe into. So, what are your thoughts on how is this going to really impact the breadth of the crypto market, or is this just a little ripple in the carpet?
Well, I'll take the Sequoia question first, the VC question, because we've seen all these reports that VC investing in crypto and in tech overall is way down this year. Well, one thing I'll say for anyone who understands statistics, right, is way down from where? From the incredible heights of VC investment in 2020, 2021, 2022, when tech was flying, all the tech companies were flying. FinTech was crazy. Of course, crypto, everyone was investing in crypto. And I think what Sequoia and others are finding is, one, they made some bad investments, right? And I can't remember off the top of my head if Sequoia was in on FTX, but a lot of these Silicon Valley VC firms were all in on FTX and lost a tremendous amount of money. And maybe it's just this feeling of we don't know what's going to happen, and we don't feel as comfortable investing in crypto. We don't feel as comfortable investing in some of these groups. One, because from a regulatory perspective, we don't know where it's going to go and where these are going to be. Two, because many of them haven't achieved any sort of product market fit yet. We haven't seen that mass adoption. And so, kind of wildly or blindly investing, they can't apply a lot of the same metrics that they would in the past to say, here's what we look for in what might be a successful team or a successful technology. And I think that Sequoia and the likes basically are not able to easily adapt their Web 2 models to Web 3. That's kind of what I'm seeing, because you have token economics that are different. What's the difference between a company that is able to launch a token today and have liquidity for it versus the old days when they would invest in a company and wait to go through several different stages before maybe that company would go public? Now, crypto companies can essentially go public almost immediately by launching a token. And I think a lot of the crypto companies weren't ready for that. They probably overinvested with a lot of FOMO there. They probably got burned with a lot, and they're paring down. And keep in mind also, Mehdi, with interest rates going up, with potential inflation, we're not going to see that growth in capital markets like we have. We're not going to see that growth in equities like we have. So there's not going to be those exit opportunities for companies like Sequoia. So they're not only paring down their crypto investments, they're paying down all their investments, right? They took another fund and cut it in half. So it's not just crypto. It's just that was kind of the hot thing for a while. And it seemed like everyone was getting rich on it. And then everyone lost all their money. If we want to transition over to your other question, your other issue about Nasdaq, I think that's a whole different issue with what Nasdaq is doing. And that goes to our first conversation around the ETFs. Right, because what I think happened behind the scenes, and I have absolutely no behind the scenes knowledge of this, but what kind of makes sense is, remember, Nasdaq is meant to be an exchange, not meant to be a custodian. They started deciding they were going to custody crypto assets. Well, here comes BlackRock and says, look, we want an ETF. we need someone to custody the assets, we need the surveillance agreement, and we need an exchange. And Nasdaq was probably trying to fill more than one role. And there's probably some back office deal that BlackRock said, look, you get to handle the exchange part. We need someone else like Coinbase to handle the custody part. And we can't have the two of you in a room together if you're also competing elsewhere. So Nasdaq, I'm going to go ahead and guess, and I'm totally speculating here, basically took a backseat and said, look, we're not going to handle the crypto custody. We're not going to compete with Coinbase if it means we get Bitcoin spot ETF business.
Well, yeah, I appreciate your breakdown and your thoughts on the Nasdaq side of things. I'm inclined to agree with you on every word of that. And just in the Sequoia question mark with FTX, I believe they did invest at least 150 million from one fund, and I think that one of their other funds did invest, which on the grand scheme of Sequoia doesn't sound like an awful lot, but it's still a sizable chunk of change to have lost in a volatile kind of sector where there's been more and more question marks. So I understand them taking a little bit of a back seat in some of their investments. And again, you raise a very interesting and solid point in the fact that equity capital markets and IPOs and such have been very, very low in 2023 as well. So it's not just tied to crypto assets and everyone's kind of just looking at, oh my God, crypto investments are down, but all investments in the private sector are down because things aren't coming to market.
Exactly.
But you know what is coming to market? The digital ruble. Our friend Putin, on the flip side, has now said yes to a Russian digital ruble. So the CBDC went live on August the 1st, which I believe was yesterday. So, maybe they are leaps and bounds ahead of the US in embracing crypto assets here. What do you think?
Well, they are. And remember, many people in Russia have been embracing crypto for a really long time. Sometimes they've been, kind of doing it and not telling their government about it. But a few years ago, when, I guess maybe it was early last year, I can't even remember anymore, when the invasion of Ukraine started and the US and the other NATO nations said, we're cutting Russia off, we're sanctioning Russia. Well, the Russians were still able to use crypto. And maybe Russia was already piloting, maybe they were already looking at a CBDC program. But what they realized is we can utilize something like this to not need the banking system. Right. And our sanctioning them probably spurred some of this decision as well. Plus the fact that Russians had already kind of been in on crypto. They had been doing more of it. Of course, they have great engineers and programmers and software developers there. So that kind of fits with crypto. Plus getting cut off from the world banking system. Well, crypto was exactly meant for that solution.
Wouldn't they be better off almost focusing more on a stable coin rather than a CBDC and then going into Bitcoin to be more of a global player? Because I'm sure a lot of the other countries aren't going to want to get involved in a Russian CBDC.
Well, you say a lot of other countries aren't, but China seems to be doing business with them just fine, right? India is doing business with Russia, right? They have a lot of people in China and India. So
there's a couple, yeah.
Right, there's a couple. And look, Western Europe is kind of stuck buying Russian gas and Russian oil for the time being. So Russia gets to decide who gets to use their digital currency, right? So if they're going to go with a stable coin, what is it going to be based on? Is it going to be based on the dollar? Well, they're not going to use a stable coin based on the dollar. They can try to have someone issue one based on the ruble, but wouldn't Putin rather have all the control over it? Right. And so he would probably rather have all the control, and he has control by virtue of controlling the government that issues it, plus controlling all the oil and gas that everybody wants. Right. So he's got the two most important commodities in the world.
So I'm sure he's been chatting to President Xi in China about how the digital yuan is working out for them, and they've kind of obviously haven't embraced Bitcoin as their primary digital currency. So if it's working for China, I'm sure he's listening to their advisors as well. So let's see how it all pans out. So you touched on this earlier in your conversation, the Ripple ruling we saw a couple of weeks ago, which was obviously quite monumental. The SEC is potentially appealing it, but it sounds like this could be a nothing done, and it should be time for the SEC to actually move on and focus on other things, of which there are lots.
Right. And I think there's another case going on where the SEC has hinted that they are going to appeal it. And the judge in that case said, I'm not I'm not too keen on this Ripple ruling from this Judge Torres. And the SEC did hint we are going to appeal it. I've heard several attorneys. Again, I'm not a lawyer. I have to go based on what other attorneys that I like and trust have said. Several attorneys have said the SEC might not appeal this, because if the SEC appeals, it ends up going to the Supreme Court, and the Supreme Court rules. That's it. That becomes essentially the law. And the SEC, I think, is a little bit worried that they're not going to win, that they're not going to necessarily win an appeal. And that would be a monster black eye just overall for the SEC. I mean, I think you and I have talked about it years past, probably. In the past, I've always said, look, when the SEC brings a case against someone, they're likely to win. And in this case, it was kind of a draw, but this was a big part of the draw. And the SEC definitely doesn't want to put that much resources into this and lose at the hands of the Supreme Court, which, by the way, this particular Supreme Court tends to lean more on the side of crypto, tends to lean more on the side of letting the markets be the markets and not too much government intervention. So if they're going to take it all the way to the Supreme Court as it's made up right now, there's a chance that they lose, and therefore they might not want to appeal the decision, even though it didn't go in their favor. Now, I'm not saying they're going to do that or not going to do that, because they've hinted that they're going to appeal. They've said, we will likely appeal this decision. But when it really comes down to it and they analyze, are they going to want to? And as you mentioned, they still have a monster case against Coinbase, and they still have some other monster crypto cases on top of all the other stuff that the SEC has to do. Right? Crypto is minor compared to everything else they have to do. It's not like they can take all their time to try to appeal decisions.
And I'm sure the SEC really can't do with the bad publicity of losing a case, an appeal as well. There's enough people gunning for Gary Gensler as it is. I think they're probably best off putting their heads down, focusing on some of the other matters at hand. But we'll see what they decide. And I'm sure there'll be some support and not support for them over the time that comes.
As usual.
As usual. But do you know which government body does seem to be getting their fingers in the pie? Is the IRS. I saw another line saying that they're really on well, first of all, they're obviously on their game, but they're classifying crypto staking rewards as taxable income. So we've got to stay on top of those things.
Right. So as of now, they have said that crypto staking income is taxable income in the year that the person receiving the staking rewards receives it, to the point that they can sell it, they can do whatever they want with it. And I've seen some CPAs that have pushed back and said, we feel like this will be overturned. We feel like we can actually fight this if we need to with different rulings, because and their reasoning gets very into like the accounting of it, that says, if I'm going to recognize revenue, then someone else has to have recognized an expense because of that, in order for everything to balance out. And if I recognize income from staking rewards, but there's no other company or group that has recognized an expense, then is that really income that I've received? And I've seen some CPAs on Twitter, some, again, that I trust and respect, that have said, we can definitely push back on this. It doesn't mean we'll win, because this is the IRS saying, as of today, here's the way we're looking at staking rewards, probably because so many people were asking, because staking ETH became such a big thing this year. And people were actually able to realize and recognize their staked ETH. Whereas last year, remember, before all the staked ETH was unlocked, if I was staking ETH for 2 years, I wasn't able to recognize, I wasn't able to do anything with it. So it wasn't a problem last year. Now it's a problem, because I can stake my ETH, I can get the rewards, I can go sell those rewards if I, sell that ETH if I want to. At what point does it become income? And the IRS, of course, is saying, well, one, we need our revenue, right? We need tax revenue. And two, it seems like income to us, it makes sense. And some CPAs are going, it kind of does and it kind of doesn't. Like so many other things we see with the SEC and crypto, it doesn't fit neatly into the boxes we already have.
Well, and I guess the IRS is probably trying to equate it in a very simplistic way to equities, where you might receive a dividend. If you're holding that equity for a certain period of time, it goes over your dividend period, you'll be issued a dividend, and how that might be treated as a taxable income. So they're probably just equating the two, but it doesn't quite, as you say, fit into the same square peg or round hole as
Right.
as the crypto world. So we'll see if
Exactly.
that fight continues.
Yep. And I don't know what the proper analogy is. They keep trying to come up with analogies in the TradFi world, and I don't know what the proper analogy to something like ETH staking rewards is. I guess it would be the equivalent of if Apple decided to continually issue more stock and give you that as a dividend. Are they splitting, or are they issuing a stock dividend, or what are they doing? It again, it doesn't fit all that neatly.
Again, but these are good. What I like about the IRS is they're putting this out there. They're taking a stance, and that's at least creating some sort of framework to have a discussion around. And
Exactly. If
you
I'm
can
filing my
fight it.
taxes based on it, I can do something this year. If I'm if I'm staking 100,000 ETH and I'm making $1 million a month in staking rewards, I'm probably going to find a CPA that's going to help me fight it. Right.
Exactly.
If it's me and I'm not staking that much, I'm going whatever. Like I'll claim it as income. I'm good.
Yeah, a couple of $100 here and there, you pay your taxes on it, you move on. The IRS is happy they're getting some sort of income from this, and the larger players are going to fight it, as you say, and we'll see how that pans out in the longer term. But there's at least some structure going in for people to act and to file their taxes. So I never thought I'd say this. Good for you, IRS. Keep on it. So, Worldcoin. We discussed Worldcoin a couple of weeks ago as well, and their WLD token. It's been on quite the tear on major exchanges recently. Do you think this is more hype, or are you a bit of a fan of what's behind this?
I'm not at all a fan of what's behind it. I'm not at all a fan of WorldCoin or the Orb or what they're doing.
Do you
I
haven't registered your iris or anything?
I have not. No, my iris is staying right where it is. I say that. Look, I have an iPhone that recognizes my face. Right, that's data that's probably stored somewhere. So I totally get that I'm not impervious. That my privacy has totally been obliterated by all the online things that I do. I think the idea of the iris scan plus putting that data on chain and giving people money and trying to have this universal basic income. Look, I think those are all noble pursuits. I think part of it goes back to the people that are doing it, right? The people that started OpenAI as this great, this great endeavor that would be good for everybody, and then lo and behold, they're making billions of dollars on it. So it's actually a profitable endeavor, and you wonder how much in the background is my information going into something like OpenAI, and it gets a little frightening when you start talking about you have artificial intelligence on one side, learning large language models, and on the other side you have scanning irises, storing that data, making it part of your identity. It gets a little frightening when you start thinking about putting it all together. It gets very dystopian, and I'm not a big fan. And again, maybe it's because of the people that are doing it. Maybe it's because there's something very Minority Report about scanning my eye, and I've seen too many of those movies. But overall, the idea of utilizing crypto to give people an identity has been there a while, and we've been thinking about it. I think it's the idea that this company that raised a whole bunch of money is the one that's doing it. I don't know, it just feels a little slimy to me.
So eventually we'll just have, the government will just go to Sam Altman and say, hey, can you open up this iPhone? They stick it against the orb, and off you go. It should be pretty simple science to get these things unlocked going forwards.
Uh,
Um,
it should be, and I'm pretty sure that there are going to be all sorts of backdoors there, and the worry of everyone kind of utilizing the system is, I think, what's a little bit scary.
yeah, again, things to watch. But I'd like to wrap on one of my favorites of the week or the last couple of weeks. We've been talking about applications for NFTs and how they kind of work with some of the real world assets and real world situations. But Etihad Airways have put together a nice logical use case. They let you stake your NFTs to gain miles. I love this. This is great. You go buy the NFT, you stake it, you get your air miles, and you can utilize those air miles like you would any others. But now, after our conversation today, according to the IRS, would those miles be a taxable income?
That's a really good question, and I guess they would kind of make it analogous to other airline miles, and are other airline miles taxable income, right? But yes, staking rewards. That's a good question. Like how are they defining staking rewards for the IRS? But if we go back to Etihad Airlines, one, I think NFTs are a great use case for NFTs is of course memberships or some sort of tracking of loyalty points or something. That's been something that from the days when I learned about crypto back in 2017, things like loyalty rewards, airline miles was kind of an obvious use case for blockchain technology, because what you get is potentially the idea that I can then maybe go sell my miles to someone else. I can take it out of that silo that is the airline or something. And that's kind of the holy grail of airline miles, right? I can use them wherever I want. But the idea of using an NFT, allowing people to purchase it and staking it is probably the airline. And I'm going to have to guess it's probably them going, well, we know who our loyal customers are now. We know, we have information about their wallet. Because of that, maybe we have information about other things that they're doing with their money, right? Which actually goes back to being a little bit frightening, that because they know my wallet and where my NFT is stored, then they can see everything else I'm essentially doing on my wallet. But it allows them to track me a little bit better. And the fact that I'm staking it, I guess, means that now they're going to give me more miles for the privilege that they have of being able to, kind of track me, see what I'm doing, and for me, giving them money to buy this NFT and being a loyal, I guess, airlines customer.
I remember, years and years ago, a good friend of mine had bought a Disney membership club, and it was a significant amount of money. I think it was maybe $15,000 or $20,000 at the time. So it was a decent chunk of change. But he would get a significant number of these points, and he had a family of I think 5 or 6, and they would basically every 2 years they could go to Disney for a week, and it ended up the amount of points that they collected, it worked out effectively for free or very close to free. And they would go to Disney every 2 years. And it was that one-time purchase, like an NFT, right? But that's to me is a perfect use case. You basically you spend 20 grand on this NFT, you stake it, you receive your points, you can utilize those points towards your vacations. And then effectively, it's just you can sell that on the open market as another NFT. I don't think you were able to transfer ownership of those Disney cards, the original ones. But now, obviously, in this world of NFTs, it's a great use case.
I think it's great. It seems like it should. And for your friend, right? Your kids get to a certain age where you're not going anymore. Why wouldn't you go sell it to someone else? Because you've made that investment. And if and what you're essentially making an investment in is, do I think more people are wanting to go to Disney in the future? And what for the airlines, it's, do I think more people are going to want to fly this airline and get these miles and get these points? And in the future, I might find that I'm not really using them and I can sell them. And maybe the miles I've accumulated go with the NFT. I'm speaking to a group out of Australia that's doing something similar for golf right now, which is, I maybe pay for this NFT membership, and that affords me certain either revenue, or not necessarily revenue, but certain rewards that I might get by having purchased this NFT. And I might get to go to the golf courses and get discounts, or I might get free green fees or whatever. And I think it's a great use case. I think any sort of membership like that is great for NFTs, because one, they're easy to track. You don't have to have your own database of it. And two, they're potentially transferable, meaning I can buy it once and I can sell it to you, and the company never has to worry about issuing more things, or all these members go, no, we have 5,000 members forever. That's all we can ever have. If you want to buy it from someone, if you want to buy one, you have to go buy it from someone else.
Perfect. Well, I look forward to more of these coming out. Adam, I've missed this. It's great to be back and chatting about these digital assets and all the new technology that's going on out there.
Great. I missed it as well, Mehdi. I'm glad we're able to catch up, and I'm sure there'll be more stories for next week.
There will. And for our viewers, don't forget, check out Adam's course on digital assets and crypto education, interaxis.io. We have the link down there as well. So also don't forget to sign up to YourFinance.tv. As I said, the numbers are growing. Make sure you subscribe. Get it done. We'll be back next week with Crypto Revolution. Until next time, good luck investing.